Hey guys, welcome to my YouTube channel. Today I'm going to show you how to identify order blocks. Order blocks are areas in the market where the banks step in to push the price either higher or lower. So what we want to see for a valid order block is first we have to identify the order flow. So the order flow is in three types. It is either bearish, bullish, or consolidating. So this is an example of a bullish order flow. The market is creating higher highs and higher lows. Then let me show you now where the order block is. So when each time the market breaks the old high to form a new one, it leaves behind an order block. But now, which order block and what is going to prove that this order block here is valid? There are a few confluences that you have to put and implement to show or to prove that your order block is valid. That is going to give you the confidence that your order block is valid. So here you see this is previous structure here that has been taken out. Previous structure that has been taken out. Previous structure here has been taken out. So each time the market takes out previous structure, you look for the order block that caused the move. So this is a swing, pullback, swing, pullback. So this swing low here that broke structure, the order block resides somewhere here. Okay, it is a petrol station. Let me put it that way. So that is where the fuel enter the market. That's where the banks step in to push the price higher or lower. Okay, now let me show you a good example on the chart so you can identify and the confluences or the criteria that you have to apply each time you spot an order block. Okay. So let's look at order flow. You can see order flow here is bullish because it is making a higher high, a higher low, a higher high, then a change of character here, a new high, new low, new high, new low, new high, right here, new low. Okay, you can see this high here has broken structure. Let me show you an example of a false order block. You see this? This low has produced a high that has broken or taken out structure here. But this order block here is not valid because there is no liquidity and there's no imbalance. Imbalance is basically a price point where the two candles formed in the market and there is gap. That's the market didn't feel it. Okay, let me show you an example of I don't even know how to define this thing, but this is imbalance here. You can see this last week. This previous candle here closed, the new candle formed, then the new candle up just continued going without coming down to fill up this space. So this gap here on this candle standing alone is imbalance, and the market has to come and fill it every time it leaves imbalance behind. So up here there's imbalance, imbalance, imbalance. The market came back to fill it all because the market does not leave a single gap behind. So here we don't see any imbalance. We don't see any imbalance down on this order block. So to identify that an order block is valid, we need to see an order block. We need to see an order block in the market. Let's just assume this is a candle. Then this is our order block. Then this is our engulfing candle. This is the move that broke structure. Okay. This gap here. Then the next candle. Let's say the next candle starts here and continues up and takes out structure. This gap here is imbalanced because there's no wick here, there's no wick here, there's gap here. This is imbalance, making this order block a very, very valid order block. You come now, you draw it, then you put your limit order on it and wait for the market to come back to it, then you buy. Okay, without talking too much, let me show you an example of a good order block. Okay, you see this? You see this impulse? It has taken out structure here. But this level still is not valid. You'll be like, why? It is not valid. I mean, this blue candle here, the last blue candle before the big push is the order block. But this is not valid. It is an order block, but it is not valid. It's not good enough for us to trade off of it because it did not sweep the previous high. every time the banks want to push the market down or up, the market will first sweep any stop loss that resides anywhere around that price before going the other direction. Meaning, if the price is currently here and it wants to go down, it will first of all sweep any stop losses that is up here, the retailer stop losses, people that are trading support and resistance, trend lines, and all of those people. These people trading these strategies, this market will make sure that it stops them out. That's what the banks do for a living. They take your money. So they'll take your money here, then break the market now and go down. So this other block did not do that. There are still stop losses here. So the banks have not stepped in yet. So we're going to wait until we have these highs here taken out before we consider that an order block. Or these lows taken out, then the move breaks now upwards impulsively. So we take our order blocks downwards. So we see which side gets swept first. That's how I trade. I mean, I just keep it as basic as possible. Then I see this move. I see this move. Can you see this? Look at this. This is the highest point in this market. This candle here closed out of it. It closed out of it, stopping anybody that was in that trade. Let's see if this move now breaks structure to the downside, because we need to see this power move here sweeps this low. Let's see if that happened. Did it happen? Just this wick here is pricing. If you go on the 1 minute, you see that these are candles. So this is pricing. This is a sweep. Right here. Follow this line that I'm drawing. You see the sweep from this wick to this one. You see that the price closed lower than that, sweeping that low. But now this is what we're more concerned with. First, this is A, this is point A. Point A, check if the highs have been swept. Here, the highs has been swept. Clearly, the highs has been swept. Just looking at it, you see it has been swept. Secondly, the lows have been swept. Thirdly, there's impulse in the market. You see all these big candles like this forcing the market down. That is what we want to see. Thirdly, we have to identify liquidity. So where is liquidity? Liquidity are support and resistance, trend lines where retailers are looking to buy and sell in the market. That is liquidity. You see, the market even broke it again further, making it a very, very valid area. So let us see if we can spot any internal liquidity here. Good. I see liquidity. I don't know if you see it. I see a trend line here, a resistant trend line where sellers might be looking to enter the market right here. Can we all agree this is a trend line? Yes. Each time the market bounces here, people are looking to sell the market. Retailers are looking to sell the market each time the market bounces here, but we are not, because we want to take their money. We are trading with the banks. We are trading with the big institution, the people that move the market, the market makers. So now, where's the order block responsible for this push that broke structure? This last buy to sell candle, this last blue candle, this candle is our order block. Because one, it swept the previous highs before breaking the last low impulsively. That's the third. I've said three things. It swept, it broke it impulsively, it took out these lows. That's three. Fourth, we need to see imbalance, and we need to see what? Liquidity. Liquidity is very, very important. As we can see here, this is liquidity forming here. Once we see this, we know we are good, because when the market will sweep this liquidity, it will tap us in this trade and sell off, because that's what the market wants to do. So now, what do? We get our sell limit. We get our sell limit and we place it at the opening of this zone, and a stop loss just above this zone, just like that, just like 1 pip for spreads or anything. Then I'm taking my profits down here, these lows. Yeah, let's take it there. So I've not seen what's happening here, so I don't know what's going to happen. Okay, we get tapped in here from what I'm seeing. Okay, you see this big movement. You see this big impulsive candle shooting downwards. Let's see if it's going to go to it. Wow. Guys, can you see this? Wow. Can you see this? I didn't take this trade. I didn't even see this one. I was just going through the charts just now and started recording, and I just found this in this video. As we can see here, the market got tapped in. This is our order here. We are in this trade already running. Let's see if our TP gets hit. Hopefully, because I'm really suspecting this level here. The market might bounce here, but I'm not looking. I'm not counting on that because I still see liquidity here. Hoping the market sweeps it and taps into this order block. There is it. That is it. This is how we do it, guys. This is how the order blocks. If you go and replay this video, all the rules I gave you, count it, write it down, make sure you find it. Make sure every time you see a setup, all of these rules are met. All, especially this one, liquidity, very, very important. Let me label them so you see them. If you're watching on a smaller phone, you should see why these lines are here. Imbalance. Sorry, this is liquidity. I'll just write it, liquidity. I'll write it there, liquidity. So you know that this is liquidity right here. This line, liquidity. All of these stop losses that are here is liquidity. Okay, let me this now is our order block. This is our 15-minute order block, OB. We leave it like that. Okay, then this here, let me label everything so you see why I wrote anything that I wrote here. This is our sweep. It's our sweep because it swept the previous highs. Very important, very, very important, because that's what I'm even looking out for before I see any setup. Then this is our break of structure, BOS. Break of structure right there. This is our setup. Guys, this is a 4.69 hour. 4.6 hour right there. Right there on 15 minutes. I don't even know how long it took. But this is it. Perfect. Perfect. This video is already way too long. I'll do another one. I'll do another examples on my next videos. I'll drop them. Same. I'll drop them tomorrow. I'm dropping this one today. I'm dropping the other ones tomorrow. So subscribe, turn on the notification bell. So when I drop the next one, you will come and watch. Guys, we don't do forex, liquidity and smart money concept. We do volatility. We do deriv. So if you're a deriv fan, if you're a deriv trader, and you look forward to make money in deriv is a very good market. It has a very, very nice like you can see the candlesticks here, everything is just beautiful. It's something you want to trade, guys. Like volatility is late. I'll be dropping more videos on volatility from now on. Tomorrow I'm dropping another example. I'll do like 3 more examples in the next video tomorrow. So don't miss it. Like, subscribe is very important so that you don't miss it. Okay, because I'll just come and continue from here tomorrow and do the next one. So if you don't subscribe, you miss and you won't learn. This is all free. I'm not selling any course. I don't have any book. I don't have any Telegram. I'll teach you everything that I know here. I just need your support. Show me that you like this video. Show me that you support this. And let me see your comment down below. Thank you for watching.